All right, let's get straight to the point. You're here because you've heard about dividend stocks, right? These aren't just any stocks, they're the kind that pays you back quarter after quarter. But here's the million-dollar question. Where do you find these stocks in 2023? Gone are the days of suits and stockbrokers shouting over each other. Now, we're in an era where buying stocks is as easy as ordering a pizza. But easy doesn't always mean straightforward, especially when it comes to picking the right platform. That's what we're tackling today, navigating the online brokerages, apps, and even direct stock purchase plans. So, are you ready to find out where to buy dividend stocks in this ever-changing world of finance? Let's jump in. And hey, if you're as excited as I am, smash that like button and let's get the conversation going in the comments. Online brokerage platforms. So, you're ready to dive into the dividend stock pool, but where do you start this year? The answer lies in the world of online brokerage platforms. These platforms are like your personal investment gateways, offering a vast array of dividend stocks across various sectors. Let's take a stroll through some of the standout features of these online brokerages. First off, user-friendliness is king. Gone are the days of complicated, jargon-filled platforms. Today's online brokerages are designed with you in mind, whether you're a seasoned investor or just starting out. They're as intuitive as your favorite smartphone app, making investing in dividend stocks a breeze. But let's talk about range. These platforms are not just about quantity, it's about quality and variety. You've got access to dividend stocks from sectors like tech, healthcare, utilities, you name it. This diversity is crucial because it allows you to spread your investments and reduce risk. Now, let's talk about fees. We all know that fees can eat into your returns like nothing else. The good news is that in 2023, many online brokerages have embraced low or even zero commission trading. This means more of your money goes into investing, not in paying hefty fees. Ease of use? Check. A wide range of options? Check. But there's more. Let's talk about dividend reinvestment plans or DRIPs. These plans are a game changer. Imagine automatically using your dividend payouts to buy more shares of the stock, compounding your investments over time. It's like rolling a snowball down a hill, watching it grow bigger and bigger. Many of these platforms offer DRIP options, making reinvesting dividends effortless. But wait, it's not just about the mechanics. These platforms are also about community and education. Many offer extensive resources like webinars, articles, and real-time data to keep you informed. They're not just platforms, they're learning hubs for you. And let's also talk about customization. With advanced tools available on these platforms, you can tailor your investment strategy to match your goals and risk tolerance. Want to focus on high-yield dividend stocks? Or maybe you prefer companies with a long history of dividend growth? These platforms have you covered. In 2023, we're also seeing a trend towards sustainable and socially responsible investing, and online brokerages are on board. Many now offer filters to find dividend stocks and companies that align with your values, whether it's environmental sustainability, social responsibility, or corporate governance. Security is another cornerstone. With cyber threats on the rise, these platforms are fortifying their defenses to protect your hard-earned money. From advanced encryption to two-factor authentication, they're ensuring that your investments are safe and secure. And let's not forget about accessibility. These platforms are breaking down geographical barriers, offering investors the opportunity to buy dividend stocks from around the globe. Want to invest in a dividend-paying company in Europe or Asia? It's just a few clicks away. Online brokerage platforms in 2023 are more than just a place to buy stocks. They're comprehensive ecosystems designed to empower you, the investor. With user-friendly interfaces, low fees, diverse options, educational resources, and top-notch security, they're redefining the investment landscape. They're not just about buying dividend stocks, they're about building a smarter, more informed investment journey. Direct stock purchase plans, DSPPs. Let's switch gears and talk about a path less traveled but equally rewarding in the dividend stock world. Direct stock purchase plans, commonly known as DSPPs. These are like a hidden alleyway in the bustling city of stock investing, offering a direct route to buying stocks without the middleman. DSPPs are like getting a backstage pass. You're buying stocks directly from the companies themselves. It's a bit like shopping directly from a farmer's market instead of a grocery store. This year, more companies are opening up this avenue, making it easier for investors to get a piece of the pie, often with lower fees than traditional brokerage routes. But how do you find these companies? It's simpler than you might think. Many well-established companies list their DSPP options right on their websites under Investor Relations. Plus, there are numerous financial websites and platforms where you can filter and search for companies offering DSPPs. Now let's break down the pros and cons. On the upside, DSPPs often have lower transaction fees compared to traditional brokerages. This means more of your investment goes into buying shares rather than covering costs. Also, DSPPs can sometimes offer shares at a slight discount to the market price. Who doesn't love a good deal, right? Another big pro is the ability to set up automatic investments. Think of it like a subscription service for stocks. You can set up regular purchases, say monthly or quarterly, and over time, these can add up to a significant holding. This approach is fantastic for building a position in a company without the stress of timing the market. But let's not overlook the cons. One downside of DSPPs is that they're not as instant or flexible as trading through an online brokerage. The process can be slower, and you might not have the same level of control over the exact price at which you buy. It's a bit like catching a bus instead of calling a cab. You save money, but you're on someone else's schedule. Also, not all companies offer DSPPs, so your choices might be limited compared to the vast array available through online brokerages. And let's not forget about diversification. If you're only buying stocks through DSPPs, you might find yourself overly concentrated in a few companies, which could increase your investment risk. This year, we're also seeing a trend where some companies are tweaking their DSPP offerings, either by adjusting fees, offering more flexibility in purchase plans, or even incorporating elements of sustainable investing. It's an evolving landscape, so keeping an eye on these changes is crucial. Another important aspect to consider is the tax implications. DSPPs can have different tax considerations compared to buying stocks through a brokerage, especially when it comes to dividend income and capital gains. It's always a good idea to consult with a tax professional to understand how investing through a DSPP will affect your tax situation. But here's something to remember. DSPPs can be an excellent way to build a long-term relationship with a company. By investing directly, you may feel more connected to the company's journey and more invested in its success. It's like being part of a community rather than just a faceless shareholder. DSPPs in 2023 are a unique and potentially cost-effective way to invest in dividend stocks. They offer lower fees, potential discounts, and the ability to set up automatic investments. But they also come with some limitations in terms of flexibility, choice, and diversification. Like any investment option, they're not one size fits all, but for the right investor, they can be a valuable part of a diversified investment portfolio. Do you find this video helpful? Then hit that thumbs up button and don't forget to subscribe to our channel for more informative videos like this. Dividend ETFs and mutual funds. Now, let's move on and talk about dividend ETFs and mutual funds. For those of you who prefer a set it and forget it approach, or maybe just don't have the time to analyze individual stocks, these options are your best buddies. In 2023, the world of dividend ETFs and mutual funds has blossomed. Each fund has its unique blend of dividend stocks, offering different flavors of risk and return. These funds pool money from a bunch of investors, just like you, to buy a diversified portfolio of dividend stocks. It's teamwork at its financial best. But why go this route? First off, diversification. By investing in these funds, you spread your risk across many stocks. It's the classic, don't put all your eggs in one basket wisdom. Say one stock in the fund takes a hit, the impact on your overall investment is cushioned by the others. Another huge plus in 2023 is the convenience factor. These funds are managed by pros who spend their days analyzing the markets. They make the buy and sell decisions, saving you from the nitty-gritty of individual stock analysis. It's like having a personal chef cook up your investment meal. Now let's talk about choices. The range of dividend ETFs and mutual funds available today is staggering. You've got funds focusing on high dividend yields, others prioritizing dividend growth, and even those zeroing in on specific sectors or geographical regions. The key is finding a fund that aligns with your investment goals and risk tolerance. In conclusion, dividend ETFs and mutual funds offer a hands-off, diversified approach to investing in dividend stocks. With a variety of options available and the convenience of professional management, they can be a smart addition to your investment portfolio, especially if you're looking to save time and effort. Just remember to do your homework on the fees and fund characteristics to make sure they're the right fit for you. Buying dividend stocks in 2023 is easier than ever, with options for every type of investor. Whether you prefer a hands-on approach with individual stocks or the diversified ease of ETFs and mutual funds, there's a platform for you. Remember, do your research and consider your investment goals before diving in. If you found this video helpful, give it a like and share your thoughts in the comments. Have you bought dividend stocks before? What was your experience? Let us know in the comments. Stay tuned for our next videos.